Can you believe it? 2 months have gone already of 2020. Well, just about a few days' time. 2 months gone. Can you believe it? Oh my gosh. Where's it gone already? Where has it gone already? All right, so cool bananas. What do we have today? Success in trading. Monday morning, success in trading. Good morning. My name is Judy V, co-founder of the Tribe of Traders, and we make traders profitable through our unique approach to trading. So what we're going to speak about today is how do you select a trade opportunity? Good morning, Patricia. How are you? How do you select a trade opportunity? Now, the first thing I want to say about that is trade what you see and not what you think you see. Okay, that is the most important start to how you're going to select a trade opportunity, because so often we, depending on our mindset when we're going to trade or going to sit down to trade, it depends on how present we are, and we will be projecting beliefs depending on our state and how centered, how grounded, how focused we are. Okay, we are going to be projecting a whole set of beliefs onto the market, and then what that will be doing is we will be trading what we think we see rather than what we see. So one of the things that I say to people all the time is simultaneously assimilate what the market is telling you, okay? Don't try and curve fit your strategy. Whatever the strategy is that you're trading, do not try and curve fit your strategy to the market. So in other words, one of the ways in which people do that is they think they see a setup for their strategy in the market, and then they will look for evidence to support that. And one of the ways in which they'll look for evidence to support that is using indicators and levels and a whole load of different other elements, different time frames, different time frame correlations. It could a number of different indicators, all of which are there to try and prove to them that what they're seeing in the market is actually what they're seeing. All right. Now here's the thing: if you are seeing what the market is telling you, you don't need any evidence, because you will be seeing what the market's telling you. You understand what I'm saying? That is why I am absolutely, totally against using 2, 3, 4, 5 different sets of indicators to support what the market is telling you. You are seeing as the market is telling you. That makes sense? Because what you're trying to do is you think you are seeing something in the market, you're seeing a price action or a pattern in the market, and you're going to use Bollinger Bands, you're going to use oscillators, you're going to use RSI, you're going to use time frame correlation, you're going to use levels, trend lines, and all this, all of which to try and support what you are seeing in the market, right? To prove that you are right, okay? When you strip all that back, take all that out, and be okay with not knowing, all right? Not knowing what you see. Be okay with that, okay? Be really okay with that. And that's hard for us to, because we have this predator, prey, fight, flight, ego in our, in our head, the amygdala, that needs to be right all the time. So it's hard to strip all that back, and when you sit down to the charts and say to yourself, it's okay that I don't know what market is doing. It's okay that I don't know what I see. It's okay. Right? Strip all that back and sit down. And then in that way, you are just leaving yourself open to allowing the market to tell you what it's doing. The market tells a story. You could read the charts like reading a novel. It's seriously like reading a novel. You could actually look at the chart and allow it to read to you or to tell you a story. When you're doing that, you are receiving the information that the chart is telling you, and then that process you then assimilate if your strategy is appropriate for that. Coming to the market to decide what it is you're seeing, to be right and trying to prove to yourself that what you're seeing in the market is what it is, you're going to then try and curve fit your strategy to the market, which inevitably leads to you losing. Okay, this is why I say it's so important. It's so important to be mindful of the state you are in when you're going to trade. Because the more in which you are centered, focused, self-aware of what is going on for you in that moment, are you in a desperate state? Are you in a stressed state? Are you in an inspired state? Whatever state you are in, knowing that if you are in a desperate state, what you are likely to see in the market is scarcity, fear, all those lower vibrational emotional states. So you're going to know that you can't really trust yourself to be seeing the market as it is, right? If you sit down to trade and you are feeling grounded, you've got a heart of gratitude, you're feeling inspired, you know that you are expansive, that you are most likely to be open to receiving the information from the market. You will be inspired by what comes back for you. You will not be desperate, and you certainly won't be feeling any fear. And this is why it's very important to be self-aware enough to know your state, to be trade, and to know that when you are trade ready and when you're not. Because that will impact the way in which you see the market. It'll impact the way in which you will see price action on the chart, and you will, if you are, and how you respond to that. If you are in an inspired state, you're going to be okay with the chart telling you, hey, there's nothing to trade here, and you'll be okay with walking away. But if you're in a lower vibrational state, like stressed or angry about, or fearful, whatever it is, whatever you're in that contracted state, you're going to want to be in the market because you're going to want to prove you're right, you're going to want to make money, you're going to want to get back in the market, you're going to want to get the thrill of being in a trade, whatever it is, you're going to get all the wrong reasons to be in a trade. That's what will happen. And that is why it's a perpetuating cycle that so many people get into. You need to pull the handbrake up, get off the train, and take a look at the state you are in when you go to trade. When you sit down and you're feeling inspired, you're feeling grateful, you're feeling what I call heart-centered. You're open to connecting to the market and allowing it to tell you what it's doing, allowing it to tell you the story that it's showing. And for you then to automatically, simultaneously know that it's a setup for your strategy, without needing all the confluencing support of 100 different indicators, 100 trend lines, and whatever else. Now listen, if your strategy requires a trend line, great. If your strategy requires Bollinger Bands, great. Or moving averages, great. That's fine. Okay, as that is what your strategy is based on, great. But don't try and then have the rules of your strategy, which may be based on 1 or 2 indicators, and then try and prove that it is so by adding in a whole lot of different indicators to try and prove what you are seeing. Does that make sense? It's very different. It's a very different use of indicators. Because there are 2 ways in which you use indicators to support what you're seeing or to support what the market is telling you. One is the indicators you require that form the basic principles of your strategy, right? Because there are a set of beliefs that are formed around your strategy that may or may not require one or two indicators. Now, here's the thing. The less indicators, the better. Okay, for us in the Tribe of Traders, we use 2 indicators. That's it. Moving averages and price action. That is it. Nothing else. All right? So the less the better. The simpler the better. The simpler your strategy is, the more profitable it will be, hands down, every time. Without a doubt. The simpler the better. Right, so that's the first thing. So your strategy will have a indicator or 2 to support it, right? So there will be a set of beliefs that price action will do X, Y, and Z based on an indicator, or maybe 2 indicators, right? Whatever your strategy is. Then there's the other use of strategies, the other use of indicators, and that is you will use different indicators to support what you are seeing, right? To try and see confluence. So your 5 or 6 indicators. And here's the thing. Most likely, you won't use the same ones every time. So what you're doing is you're changing the fundamental belief structure that has been untested, all right? That has been untested in the market for your strategy. Okay, so your strategy is based on a set of rules, which potentially uses 1 or 2 indicators that has been well tested, well proven, well back tested, and it got a high probability of success. Hopefully, if it's like Pogo or Bugsy in the Tribe, yes, it will. Most definitely has a high probability of success, back tested based on the fact that price bounces or momentums on the EMAs, the exponential moving averages, right? That's it. That's the set of beliefs that those strategies are based on. But if you're adding in, looking for support from other different types of indicators, my question to you is, 1, are you consistent to them? 2, why are you using them and not just trusting what the market is telling you, rather than needing outside indicators to try and prove to you that what you're seeing is right? Okay, so here's the thing I always talk about. Trading is not about trading from the head, it's about trading from the heart. A lot of people find that a little odd, but when you're in the Tribe, you absolutely 100% get it. Because we in the Tribe of Traders, that's how we roll. We trade from our heart center. We don't trade from our head. Because in our head, we need to be right. That's the way we are. That's the way we're born. That's the way we're born. That's the way we're made. That's the way we roll as human beings. In our head, we need to be right. In our heart, we just need the truth. There is no right and wrong. There is only what there is. In our heart, we don't need to apply a meaning to anything. We don't need an answer. We just receive the information as it is. No judgment necessary. In the head, there's always judgment. Okay, so in the heart, when we're looking at charts and we're being open to receiving what the information is that we are being told by the charts, we receive it from a place of our heart. There's no judgment. That is where we will be inspired. That's where we will respond. And when you do that, you don't have any fear. There's no fear coming from the heart. No fear. You don't need proof. There's no fear. You don't need evidence. You just respond intuitively and you trade in that intuitive space, not fear-based. Very big difference. And when you do that, you're not attached to the outcome. You're not attached to the desperation we feel. Is this trade going to win or is it going to lose? There's none of that noise. There's no attachment to the outcome. And in that space is where you start getting consistent profitability. And that's why we are profitable, and that's why we trade in a different way in the Tribe of Traders. Okay, guys, I hope that was useful, and I shall catch you again next week. Take care. Have a fantastic week. The last week, if you're up, if you're profitable, trade to your target. Okay, don't overtrade. Stick to your target. And also, likewise, don't keep trading in a drawdown. Do not. We'll cover that more next week, I think. But how to manage drawdown. Should we do that? Next week, we'll do that. All right, guys. Take care. Have a fab week. Bye-bye.